blue one is the 5-day, and the turquoise one is the 50-day moving average.
Ooh.
Now, you can do this for all of them, and I've come up with an indicator.
Holy
Jesus.
shit.
Oh, right, there you go.
We're going to have a fucking NASA launch in a minute.
Right. See, TradingView, it's amazing.
Oh, it's a great tip. Once you leverage it, it's amazing.
Yeah. Now, this pane here is all of those tickers for the 5-day up to the 200-day moving average. The bright, the almost white line is the 200-day moving average, and the darkest blue line is the 5-day moving average. You can see here 520, 50, 100, 150, 200 in the bottom left corner.
Yeah.
When they are all above this red line, it gives you a darker red sell signal. When they are above, so that is 70%. So when 70% of the stocks in the S&P are above all of their moving averages, it triggers a sell signal. When 75% of them are above all of their averages, it gives a strong sell signal. But the best one is the buy signals, because look, you got that one there, but look at this. September, October, that was the low.
What I like is
and,
the fact
look
that
at this.
the 200 moving average and stuff like that, the way it moved with the S&P is just like beautiful, isn't it?
And
now it's coming up.
Look, the COVID low.
So basically, buy momentum.
This one here.
Yeah, the buy signals work, but we mentioned this in the start of the Zoom, that when there's momentum in the TradFi market, you're better off riding it instead of selling into it.
Oh, yeah. Yeah.
100%, because you're just going to get blown to bits.
Yeah, the sell signals are a little early, but the buy signals are like perfect.
The buy signals are absolute perfection.
I think that would be a great indicator just for buy signals, and leave the sell signals alone, because you could probably do that on your own judgment call by, I've made a bit of money, or this has risen too high, or you can maybe combine it with something else, like maybe chart structure or something.
Really, what I've noticed is the divergences. So you've got price going up.
Yeah, that's a great point.
Look at this. There's huge divergences, and this shows how equities, the indexes, whatever is underlying inside that index that is driving the market. So in this case, the big tech stocks, FANG stocks, they were still going up, but the breadth of the market was going down, which is what signals the tops in.
And that's where you can start dollar cost averaging out.
Yes.
But the only downside to any divergence that I've ever used is obviously the fact that sometimes you can be very early. It's like, it's coming. When's it coming?
This is the thing. This is why it's so much easier to pick the bottom than it is the top.
Yes, 100%. Always has. But that's why I say to people and take a profit, it's one, it's subjective, and two, it goes on what you've made.
Yeah.
Because it may well go on for another 2 weeks and you may well lose a bit of money, but sometimes it may not. And it might just absolutely, like, especially in crypto, it might be you wake up the next day and it's like, oh God, we're down 30%. What's happened? Oh, Sam Bankman-Fried's put a cucumber up his ass or something.
This is why I do better in TradFi.
Yeah.
And this, right, okay, brace yourselves, folks. What this is, there's 11 sectors. There's 11 sectors in the S&P. So I've got the S&P index, SPY, which is the ETF for the S&P. And then I've got, here is 5 of the sectors. Going top left to bottom right, it is XLP, consumer staples, consumer discretionary, healthcare, utilities, and tech. And each one of these, see these charts, they're different. The breadth charts are different. So this is looking at each sector individually. So that's why you could confidently go long on, what's this, utilities in May and in March. But at that time, hang on, it's here. At that time, looking at the other charts, everything has gone up but the breadth in this made utilities a stronger chance of going up than the others. And same for the sell signals. So this helps you see what the rotation is in the sectors. And here's the other 6 sectors.
Bloody hell.
Well,
So-
I think sell everything and buy when the little green bar turns up again.
Well, this is it. And here's the FTSE.
See, with this then, would you do this similar to what I'm thinking about doing in terms of like do it as an investment hold, as a positional hold instead of as CFD, because then you can rotate between stocks when they're doing certain things, and you can sell then rebuy back or whatever.
I'm doing both.
Build cash.
I'm doing both because I've got some invested and I've got some in CFD, because with CFD you get leverage and you can make profits quicker. You can also make losses quicker.
You can also die quicker.
Yeah, but at the moment I'm long the FTSE and long the Stocks 50, the European index.
As in trade or
trade. Yeah, CFD.
Yeah, you're better off trading the indexes versus.
If I say I'm long
individuals.
something, it's a CFD trade rather than investment.
I'm thinking about doing it as investment just to build cash, because I'm going to have quite a decent chunk of cash eventually when I can do it. So I can probably just do it as positional hold. Hence why I'm thinking, let's look at some cyclical type of tech stocks for the ISA allocation to get it quicker, but find quality things that I want. But dividend stocks are very different. They don't move in the same sort of way. They're very, very sluggish, but they're good to kind of hold, obviously. But sometimes you get a freak one where they absolutely grow, and then you can take your profits off them. Because basically, if you're going to get that, you're better off getting the value appreciation versus the dividend payment. Sometimes you're like, fuck it, because then you can rebuy back low and get more dividends in the future.
That's the thing.
Because stock units equals more dividends. So there's very different ways of doing it. So like Rio Tinto, for example, is one of them ones where it's got high yield, but it's also very volatile as well.
I like Rio.
It's cool, isn't it? See, it moves a lot more than a traditional stock. If you look at like some of the stocks I'm holding, they hardly fucking move. Like they don't do anything. But this is very cyclical. This
and GSK.
Yes. The cyclical types. Whereas some of the ones I've got, like YouGov and stuff like that, is like the great dividend growth. The dividend yield's quite small, but their growth's amazing. But they are not moving much at all.
Yeah.
I think United Health is another one where they just don't move.
And they don't move the same either all the time. So, you can be in Rio here.
Yeah. And out of GSK.
And out of GSK. Not completely, but just, when GSK is on its way down, okay, so you sell some. And then when it's ticking back up again, I mean, you could get caught out there. But yeah, once it's trending up again, and the whole suite would help with this.
But the aim of the game is, if you pick really nice stocks that you really, really want, the aim of the game should be, I want to get more. There's two ways of doing it. You put more capital in, or you sell at the highs and rebuy back at the lows. Well, not the whole bag, obviously, because you want to still get earnings. But at the end of the day, like, if there's opportunity to move your and rebalance your portfolio to get more of a better stock, that's what you do. And I think a lot of people forget that. It's the same in crypto. I say, like, cycles. You buy Bitcoin at 3K and you're going to sell it at like 60,000. Cool. What are you going to do with it? Well, I'm going to rebuy back when it's like 20K again. Okay, sweet. Cool. Great work. You've just made some free units. But people don't think like that all the time. They just think, oh, it's fucking dead. Like I said it loads of times. No one wants to hear this. When you've bought high or you've not done it right, no one wants to buy more at the floor. They just don't. It's like, it's dead. Don't want it anymore. And like, look at all the shit I'm getting. Oh, dot's crap. It's like it's dead. It's like, really?
Yeah. That's a sign to buy. Signal to buy, that is.
Oh, it's like honestly, I'm going to be fucking. I will be in beanbag soon. If I don't.
I'll tell you, I'm so overweight dot.
Oh, I am. I have been for a while.
I got loads. I got loads of dot.
The only thing that saved my portfolio is the fact that Bitcoin's gone up. If Bitcoin hadn't went up, I think it would have been like probably my second biggest. Well, no, dot would probably be my highest asset. Yeah,
see, I'm not in Bitcoin because the beta isn't there. So that's why my Bitcoin play is in the miners.
So is your plan with altcoins eventually is to, when the dominance really hits the floor, take some profit into Bitcoin, then hodl that eventually? I'm going to presume, because you can play with that then in the future.
Probably some.
You don't have to do all
But,
that. I'm thinking 25% of my holds will probably go into
yeah,
BTC.
something like that. But at the moment, what I'm doing is trying to build up to a reliable stream of income. Whether it's going to be enough to be my only income, I don't know. Probably not. But yeah, I'm probably putting time and energy and effort and all that stuff now
Thing is,
into making this work.
If you do have a really good crypto cycle, and then you were able to have funds to be able to distribute and have a trading fund, a proper bag of investments, it at least allow you to at least reduce your workly hours, at least to spend more time on it. Then obviously the snowball will then increase, and then more time you can dedicate to it, the even better. So it's one of them, isn't it?
For me, it's this stuff.
Yeah.
You know, if I can, I'm kind of kicking myself because I already knew about this to some extent. And then at the start of the year, I found out about these things. I started to work on these indicators. I think in December, January, because I heard Milton Berg on a podcast. No, actually, I think I found him through Real Vision. And he is an extremely technical trader. He runs a fund, and he, I think he's called at Miltenberg on Twitter. But he is, you know, you think anyone's technical? No. You want to hear Miltenberg talk, and they made thousands of indicators over however many decades. And market breadth is one of his biggest things, and volume. He uses volume as well. So that was for him with the S&P. Just put that full screen.